The GDP picture, Vietnam Ministry of Industry and Trade exceeds expectations. Vietnam closed 2025 with a headline figure that drew widespread attention. GDP grew by 8.02% year-on-year. This growth rate places Vietnam among the fastest growing economies in ASEAN and ranks it within the world's leading growth performers. Against a backdrop of continued global uncertainty, rising trade tensions, and mounting pressure from the United States' reciprocal tariff policies, growth of more than 8% stands out as a notable bright spot. On average, during the 2021 to 2025 period, Vietnam's GDP expanded by around 6.3% per year, slightly higher than the 6.2% recorded in the previous 5-year term. Associate Professor Dr. Nguyễn Thường Lạc, Senior Lecturer at the Institute of International Trade and Economies, National Economic University, described 2025 as a highly successful year for Vietnam's economy. According to Dr. Lạc, doubts were widespread at the beginning of the year about whether Vietnam could achieve its ambitious 8% growth target. By year-end, however, the 8.02% figure had become a reality. This outcome reflects the effectiveness of mobilizing and coordinating multiple growth drivers under the leadership and management of the party and the state. The first major driver was public investment. In 2025, Vietnam pushed ahead decisively with a series of large-scale infrastructure projects. Construction progress accelerated on the North-South Expressway network, airports, seaports, social housing projects, and power transmission systems. Public investment was not only disbursed more rapidly, but also generated strong spillover effects across the economy, making a substantial contribution to overall growth. The second driver came from domestic consumption. With a population exceeding 100 million, combined with wage reforms and adjustments to personal income tax, purchasing power in the domestic market improved markedly. Many domestic enterprises operated more efficiently, while weaker firms were gradually filtered out. As a result, domestic consumption continued to reaffirm its role as a stable pillar of economic growth. The third driver was private investment and foreign direct investment. Private investment remained a key force, working in tandem with public investment and FDI. Total registered foreign investment in 2025 reached USD 38.42 billion, up 0.5% from the previous year. Notably, realized FDI was estimated at USD 27.62 billion, the highest level in 5 years. This positive result underscores foreign investors' confidence in Vietnam's business environment. The fourth driver was trade. In 2025, Vietnam's total merchandise import-export turnover reached USD 930.05 billion, an increase of 18.2% compared with 2024. This figure brings Vietnam close to the USD 1 trillion milestone that earlier forecasts had projected for the medium term. The outcome demonstrates that traditional growth engines have been harnessed effectively and continue to serve as a powerful force for economic expansion. Alongside these traditional drivers, new growth engines also began to gain traction. Digital transformation was rolled out rapidly and effectively, particularly within the public sector, helping to simplify administrative procedures and reduce costs for businesses. Green transformation has become a mandatory requirement for many exporting firms, enabling Vietnam to maintain its markets and position in global value chains as environmental standards become increasingly stringent. Administrative reforms, including the implementation of a two-tier local government model and staff streamlining, have further improved the business climate and enhanced governance efficiency. On inflation, the average consumer price index in 2025 rose by 3.33%, remaining within the National Assembly's target of under 4%. This is widely regarded as a positive outcome. Fiscal and monetary policies were managed flexibly and in a timely manner. Interest rates were adjusted appropriately to help control money supply, while exchange rates were kept stable, supporting exports and meeting import demand. Within the broader growth picture of 2025, the role of the Ministry of Industry and Trade stood out clearly. According to Dr. Nguyễn Thường Lạc, the ministry delivered results that exceeded initial expectations, particularly in the areas of trade, industrial production, and market regulation. The import-export strategy proposed by the ministry and approved by the government set a target of around USD 800 billion for 2025. Actual performance at USD 933 billion shows that policy execution successfully identified the key touch points of trade-driven growth. This outcome provides clear evidence of the effectiveness of the ministry's strategic direction and policy measures. The Ministry of Industry and Trade placed strong emphasis on building and strengthening supply chains, promoting exports, and expanding markets. At the same time, domestic market development received appropriate attention, helping to maintain balance between exports and internal consumption. Guidance for enterprises on meeting green and digital transformation standards has enabled Vietnamese goods to remain competitive in international markets. In industrial production, the ministry facilitated growth by simplifying administrative procedures and reviewing regulations, proposing the removal of those no longer appropriate. Trade promotion activities were reoriented toward a more focused and targeted approach, emphasizing direct access to specific markets and customers. Continued participation in and negotiation of trade agreements further expanded development opportunities for Vietnamese businesses. Given that the Ministry of Industry and Trade oversees sectors accounting for a large share of GDP, its role is critical to economic growth. In 2025, this role was demonstrated with particular clarity. Looking ahead, Dr. Nguyễn Thường Lạc noted that the ministry's key task will be to effectively convert external resources into internal strength, increasing localization rates and improving the utilization of preferential treatment under free trade agreements represent significant remaining potential. If these efforts are implemented effectively, Vietnam's import-export turnover could surpass the USD 1 trillion mark as early as 2026. The 8.02% GDP growth recorded in 2025 was the result of the convergence of multiple powerful drivers. Among them, the Ministry of Industry and Trade left a clear imprint through effective market management, the promotion of industrial production, and the expansion of trade, laying an important foundation for sustainable growth in the years ahead.